Hey everybody, good to be here. My name is Brent Moores and it is time for investing in dividend stocks. I'm sitting in for Cam this week and glad to do so because I love talking about dividend investing. Today I want to talk about doing a screen for dividend stocks in light of a company's sector and comparing to peers in that regard. So we'll get to that in just a minute. Now, let me also mention this. I'm joined by Kevin Horner in the chat. Appreciate Kevin. I worked with Kevin for a few years now and grateful. I've learned a lot from him, and I encourage you to follow him on X at Kevin Horner CS and myself on X at Brent Moore CS. So we'll do that. Now, before we get too far into this, let me just mention the material today is intended for general informational and educational purposes only, and the risks associated with investing in dividend-paying stocks, including there are risks associated with investing in dividend-paying stocks, including but not limited to the risk that stocks may reduce or stop paying dividends. And Schwab does not recommend the use of technical analysis as a sole means of investment research. All investing involves risks, including loss of principal. Past performance is no guarantee of future results. And something to keep in mind is I'll be looking at individual symbols and stocks today, and we'll be talking about them, but those aren't these are just examples for our purposes here. And diversification does not ensure a profit and does not protect against losses in a declining market. Okay, let's do this. Let's head on over to the schwab.com website. This should look relatively familiar to you. And a resource I want to show to you that isn't just for dividend investing is if you go to Learn and click on Learn and click on Courses, what happens is it comes up with this page, and sometimes it comes up to Insights into Education, but you just click on Courses at the top of the page, and you'll see different courses, which is great. I'll encourage you to go through them, find one it's a whole bunch of them that you may find of interest. But also, what I want to mention is under income investing, and I've shown this before in here, there's a dividend stocks information here on this. You can go through it at your own pace. Now, some people prefer the video approach to things, the YouTube approach, but if you want to go through, it has little quizzes and text. You can go out at your own rate and you can skip through things fairly easily. But one thing on here is at the end of it, it's a little bit hidden under resources, there's an income investing sample plan. There's sample plans for other types of investing as well, but for our purposes today, I want to talk about dividend stock sample investing plan. I'm not going to go into super detail on this, but let me do mention that there are some different things that we may look at here. And this is going to be kind of my starting point, and then we're going to tweak it a little bit per the topic I mentioned already. For example, in this sample plan, it says a current dividend yield is greater than a benchmark like the S&P 500. Well, the current S&P 500 dividend yield is about 1.1%. So that may be kind of a blunt instrument to say, just compare it to the S&P 500. Instead, what we may do is we may compare it to a different benchmark. We'll do that here. A stock that's been raising its dividend over the last 5 years, okay? Dividend growth rate. Average dividend payout ratio below a certain threshold. So it's just 40. That's actually a fairly strict threshold, I would submit. I think for a lot of people, they may go, well, maybe 60% is or 70% or something like that. But that's what this one says. This is, again, just a kind of a starting point to get us thinking about this. For those of you who aren't aware, what's a dividend payout ratio? It's just the amount of money being paid out in terms of a dividend, well, in the form of a dividend, as compared to the earnings a company brings in. If a company makes, 100 million in earnings, and it pays out 100 million in dividends, then the dividend payout ratio would be 100%. If it pays out 50 million in dividends to the 100 million in earnings, that would be a 50% payout ratio there. So that's what that is. Return on equity above a certain level, such as 10%. Okay, so it's giving us this kind of fixed number. We may tweak that a little bit here as we go forward, but we'll look at that in just a little bit. This is just kind of often considered to be a general management effectiveness ratio, is what sometimes they'll call an ROE. We're going to look at that. Debt to equity of at least $1 of assets for every dollar of debt. That, well, as I was saying, that dividend payout ratio may be a little strict. That one may be a little bit on the loose end of things in my mind, but we'll see on that. We'll look at that a little further too. And a PE ratio such as between 10 and 30. So this is kind of the starting point that I want to look at for you. And I'd encourage you, if you haven't ever used this, hey, pull up the sample plan, download the sample plan, and realize it's not a recommendation specifically, but it's a sample, it's a good starting point maybe to look at things. So that's what we're doing. By the way, it does give some information if you're interested on ETFs or mutual funds down here below. I'm not really going to get into that today though. So we're talking about individual dividend stocks today. You can print this out. I think I mentioned that here. Let me go back. And just as a reminder, where to find that, that's under Learn and Courses in the Income Investing course. Now let me go to research here, because I'm going to go to research. And what I want to submit to you, whether you are doing dividend investing or whether you are doing other types of investing, growth investing, value investing, generally, I would say most investors would say that you don't just compare to some static universal whole, but against a benchmark of some sort, against its peers, in other words. So if I take AT&T, this is just an example here, and I want to know, well, I want to know some of its competitors here. What you can do is you can pull it up, you can scroll down, keep scrolling, scroll down a ways, and you're going to see peers and ratio comparisons. Okay, AT&T, Verizon, Comcast, and so on. And you can see some information here. But as with a lot of areas on this site, click on Show More. Okay, and I'll show you this a couple times. And you can see it in more detail, some of the information here. But if I want to say, well, what sector is it in and what are some of the general numbers for the sector, you can go to where it says Index Comparison, right there. Okay. Now, you're going to lose it. If you don't go here, you're going to lose it. You're going to forget where this is. So you may want to actually jot this down because it's easy to forget this. Click on Index Comparison. And then what you can do is you can look at this and you could say, oh, well, here's some numbers for AT&T, but here's the numbers for the sector, for communications. For the communications sector, look, it gives us several things. I'm going to focus today, I'm going to look at PE ratio. I'm going to look at ROE, because we mentioned that. These are all in that plan we looked at, and dividend yield. There's some others that you may like, but they're not in that plan, so I'm going to ignore those for now, okay? But, so for communications, the PE ratio is about 25 for the communications sector. Return on equity is about 20 for the communications sector. Dividend yield about 0.75 for the communications sector. So if you find something else that's in the communications sector, let's say Meta, okay? Meta is a company that's in the communications sector. So obviously this column would look very different for Meta. This column is going to be the same because they're both in the communications sector there. So that's how you can do that for any sector that you want. So let's say I want to look at, I want to give you an example here, and I'm going to use materials as an example. So I'm going to pull up a company that I know is in the materials sector, Compass Minerals, and I'm just going to pull that up. So let's look at that data for this. Do you remember how to get there? I told you you'd forget. Maybe you remember. You go down to, the easy part is you remember to go down to peers and ratio comparison, but then you click on show more, but then you got to go and click on index comparison. Click on index comparison, and we can look at that info here. PE ratio. PE ratio, that's pretty high. That's surprisingly high to me. About 45. Okay, I'm just going to round here on that. Average for the sector. Okay. What about ROE? About 7. Is that low? That's lower than I'd expect maybe. That's for the sector. Dividend yield, about 1.6 for the sector. And this is one that obviously, when we talk about investing in dividend stocks, is kind of one that everybody thinks about is dividend yield. Well, you take some sectors and you look at the average dividend yield for the sector, for the sector, such as IT, information technology, and that's going to show up as like 0.1, 0.1, like very little. IT stocks just typically don't pay much in the way of a dividend yield. Okay, but that's not the case of what we're looking at right here with materials. But the point is this: if I'm looking at a IT stock and I want to find something that's paying an above average yield, I don't really have to go very far. A 1% dividend would be an above average yield. If I want to find, say, a material stock that's an above average yield, 2% would probably fit the bill. If I go to utilities, the average yield is 2.7. Real estate, average yield, and this is going to include a lot of REITs, is 3.7. Okay, so if you compare to your peers, that may give you a better sense for what a good yield is, or not. Okay, same thing for PE ratios. We mentioned that IT sector, the average PE ratio is 31. Well, if I go down to financials, the average PE ratio is 16. So there you go. That's kind of the premise of what we're doing here today is. So let's go and I'm going to look for a materials stock in a scan, but I'm going to use that information that I just mentioned. PE ratio, about 45. ROE, about 7. Dividend yield, about 1.6. Okay, so how are we going to do that? I'm going to go to research. I'm going to go to stocks. I'm going to go to stock screener, and we're going to build a screen. Okay, we're going to create our own screen on this. And then one of the things you can do is you can save the screen after, and then you can just tweak it for the data that you want. But let's start with this. I'm going to go to basic. I'm going to go to my sector. So I'm going to click on sectors and industries, and I'm going to click on materials. Okay, well, we got 1,500 stocks there. I'm going to go to dividend yield, and dividend yield isn't going to be under basic. Dividend yield is going to be under dividends. So let's go to dividend yield, annual dividend yield, and I'm going to go here. And we said the average dividend yield for the materials sector is about 1.6%. I'm going to go above that. I'm going to go 2 or above. Now, I'm going to cut it out at 6%. We've discussed, I know Cam's discussed many times some of the dangers of maybe going with a very high yield. But so we'll say 2% to 6%. Can you tweak that to just because we're above, could we make that 3%? Yeah, we could say 3% to 6%. We could do that. But for our purposes, to illustrate our point, we're going to beat the sector average on those 3 areas that I picked out. Dividend yield, ROE, PE, we're going to try and do better than the sector average on that. Okay, Dividend growth rates, okay? So I'm going to add a dividend growth rate, and I'm going to say at least 5%, okay? And we can go above that. I don't care how high that goes. High is fine. Now, you can see we've narrowed this down quite a bit to 18 stocks here on this. Let's go to a payout ratio. And here's payout ratio. I'm just going to go to trailing 12 months payout ratio. And now it said less than 40%. I said, well, that's a little strict. Maybe I'm going to say less than 60%. Now, there may not be any difference. I don't know if there is between the 40 and the 60. There's a little difference there. I'm going to include those 60. So I'm going to be a little looser on the payout ratio than what the plan says, but I'm going to actually be a little stricter when we get to debt to equity there on that. So there's our payout ratio. Now, let's go to return on equity. And that's not going to be under the dividends category. That's going to be under financial strength, I think. Yes, return on equity. Okay, so here's return on equity. And the average for the sector is, I jotted it down, 7. 7. That's kind of a low bar there. Typically, I mean, typically we're looking at something like closer to 20, 15 to 20% for an average. But so we're just saying 7. So I'm not going to go to the 15, 20%. I'm going to say 10% or greater is going to get me better than the sector average. And by the way, everybody, there's a survey link out there. So we appreciate your feedback. Feel free to click on that. There's just 2 kind of questions, quantitative questions. And if you want to add in some comments, you can do that. It's real quick. Believe me, I don't like long surveys. This is not a long survey. It's a quick survey. Okay, there's ROE. Let's go to debt to equity. Where's debt to equity? Debt to equity is just right above that. So I'm going to go to debt to equity. And I said, look, debt to equity on the plan, it says like 100% or less. And in my mind, that's a pretty low bar. Pretty low bar to hit. So I'm actually going to go a little bit lower than that. I'm going to go down to like 60%. Okay? 60% debt to equity. Let me show you how to do that. This is kind of, different websites do it differently. Sometimes they're expressed in percentages, which is kind of what I'm used to be honest. But this is like, gives you these numbers, 1, 1 to 2. This 1 right here represents 100%. 2 represents 200%. 3 is 300%. So you got to realize that before you start using this thing here. And so what I'm going to say is to get to 60%, I'm going to have to click on enter specific values. I'm going to click on that, and I'm going to say less than or equal to, and we're going to do 0.6. 0.6. Okay. And then there's one more, and that's a PE ratio. And that's going to be under valuation. So let's go to PE ratio. I'm just going trailing 12 months, PE ratio. Industry average, sector average, PE ratio 45. Yeah, that was pretty high. So I'm going to go quite a bit less than that. Technically, I can go to 40. I'm just going to say less than 30. Now, I think for a lot of these, you could look at this and say, 30, for a lot of sectors, 30 seems really high. Well, that's one value of looking at the sector average. You just got a sense for that. So 30 actually would be better than many here on this, better than most. And now what I'm going to do is I'm going to click on View 5 Matches. I'm going to pull that up, and there we go. There's our matches, okay? So we have some stocks, and we have some information. You can see that information listed right here. You can scroll over if you want to see more. And you can see materials. That's because we limited to materials sector. Our yields are all at least 2%. Growth rates, payout ratios, and so on. Okay. And then if I want to evaluate a company, what I can do is I can click on the company. I'll just go to the first one here, Barrick Mining, and I can click on that and it'll bring up the company. And then what I can do is I can look at that company and analyze it further. If I want to, so I'm going to scroll down and you can see, we'll look at, here's a 3-year chart of it. And you can see it's done fairly well in the last 3 years. Well, there's a mining company. Think of gold. Have you guys seen gold prices? Well, gold prices have gone crazy kind of over the past few years, done really well. And there we go. So that's, that's going to be, it's probably going to be pretty correlated to the price overall. That's just comes with the territory of mining companies, by the way. So you can go here, and then what we can do is you can see the dividend there, but you can also scroll down, and what you can see is dividends, and you can click on Show More and look at the past dividends. So here's past dividends. Now this has been kind of inconsistent a little bit. It goes down and up, and it does. Some companies go with like the theory of we're just going to either keep our dividend steady or increase it slightly each year, year over year, and which is fine. And if you do that, you're more likely to end up on a list like the Dividend Aristocrats list. On a company like this, where it kind of, the dividend goes up and down a little bit, it's not going to fall on that list. It doesn't mean it's a bad company, it's just different. Now this actually this is a kind of a special dividend it kicked out there. You can see that right there actually. On that, and they have an extra dividend, which I don't know how they're distinguishing extra dividend from special dividend. That's the gray area here. But the blue is the kind of the regular dividend. You can see, hey, it's gone up and it's paying about 4% right now in terms of that. So, so there's your dividends, and you can see that history if you want. You can also compare it to some other companies in here. Vale is 7% dividend. Okay, and you got some that are significantly lower on that. Let me go back here and let's look at some other things other than just dividends. Let's look at earnings. Let's see, that was dividends. Here's earnings. Let me click on Show More. And generally what you want to see is you want to see increase in earnings. You want to see increasing revenue. Here's earnings the last few years. Here's revenue the last few years. And so that's not bad. 5-year growth rate for 17% in terms of earnings. And there's your cash flow as well. Well, let me go back. So that's looking at earnings. And then you can go to the peer comparisons and you can click and you can kind of zoom in a little bit and you can see how the company has performed to its peers. And you can see some more information on this, and including like debt to equity ratios on that. Okay, there's your debt to equity ratios, profit margins, ROA, ROE. And so there's some other areas you may compare it, not just to the sector, but to some more, we'll say, immediate peers there. And when you do this and you look at these, sometimes what you'll start with is the intention of going, well, maybe this is the interesting stock I want, but hey, maybe this one looks better or something like that. And so you start, it takes you down and you find a different company when you do that. For our purposes today, we're going to stick with Barrick here, okay? So let's go and then there's like ratings. You can look at these ratings. Now, I'm not going to go into the ratings. I'm not going to go into individual reports. Let me suffice it to say this. Some people like looking at these analyst reports on these companies, and you can click on report if you want to look at one. These are third-party reports, and I'll tell you what, they get it wrong, okay? Just like we all get it wrong sometimes. They sometimes get it wrong. So it can be part of your overall research plan and analysis plan for a company, but just realize that's what they are. They're third-party reports, are not endorsed, but they are provided as a service to you so that you can look at those. All right. So question, does the order of conditions matter? No, the order of conditions should not matter on what you put in there. And so I'm not sure why you're coming up. I'm wondering if somewhere this is for Lakshmi in the chat. Lakshmi ran the scan and came up with different results. I suspect somewhere that there was, maybe we have a little parameter that's slightly different there. That's my guess on that. I don't know otherwise. It shouldn't matter what order you put those in. Let me click on modify criteria here and do this. Because look, it doesn't matter whether we say the debt to equity should be less than 0.6 and the return on equity is 10 or above. If that's first or that's first, that shouldn't make any difference there on this. Okay? All right, let's move forward. So that's kind of the general process that we're going to use here as we do this. But what you can do is then, if you like a scan, you can then save, I call it a scan, it's a screener, same thing, okay? You can save the screener right down there, okay? So I'm going to save that, and I'm just going to say dividend screen with sector, okay? Sector. Let me click on save. And there we go. Okay. So now if I want to come back to this in the future, I can. The other thing I can do is I can just kind of tweak this and or if I bring it back this way and I want to change it to something else, I can do that. But I need to know the parameters I'm going to use for another one. So we're going to do that one more time here. I'm going to go and I'm going to do, let's do, say, industrials. Okay. So I'm kind of not doing utilities and real estate, which are common targets on dividend investing. I'm trying to, because we're talking about diversifying, which is fine. So let's look at industrials here a little bit. So I'm just going to bring up something that I know is kind of considered in the industrial sector. Let me go on this page here though. And I'm just going to go FDX. Okay. And then I'm going to click on this and I'm going to do the same thing. Okay, so I'm going to go down to peer and ratio comparison. I'm going to click on show more. And I'm going to go and I'm going to click on, remember, this is the tricky part. Where's that data? Look in here, you're not going to see it. You got to go up here to index comparison. That's the one that always trips me. Click on index comparison. And here we go. Okay, there's our industrials data here. Okay, we said we were going to look at three things. We were going to, hold on. We're going to look at three things. We're going to look at PE ratio, 32 for industrials. This is like a forward PE, by the way, which I think for a lot of screens is a very valuable thing to look at. But given the investing plan that we looked at, the investing plan had us looking at a trailing 12 months PE, past PE. So that's what we are looking at. Return on equity, 18%. And yield about 1.17%. Okay, so what I'm going to do here is I'm just going to jot these down real quick. And I'm going to go back, and we're going to go back to our screener. Now I can just modify this existing screen, or if I want to, so I could just say, oh, I'm not going to do materials, I'm going to go industrials. Or if I want, I can go to my save screens and click on that, and it will bring up, there's my save screen, and I'm going to modify my criteria there on this. And so that's where we were. So either way you want to start, we're going to start with industrials. Okay. If you want to get more specific, okay, let's say we wanted to just look at like FedEx and UPS and whatever. I could just, go ground transportation or something like, or I don't know, even know which one that's in. Yeah, I think that's probably there. You can go and look at, you can narrow it down to whatever industry you want on that. Let's go on down. Annual dividend yield. So that's one we tweaked based on what the industry was. And for materials, we said minimum 2%. I think I'm going to do the same thing on industrials, because industrials was 1.2%. Okay. So I'm just going to keep this one the same at 2%. Now, if I wanted to go to like 1.5%, I could do that. I can click on enter specific values and do it that way. 3-year growth rate, I'm going to keep. Payout ratio, I'm going to keep. Return on equity. We said return on equity for the industrial sector was 18. Okay. So I'm not going to do, I don't want anything that's 15 or less or 18 or less. So I'm going to do that. I'm just going to make this 20 or higher on that. Okay. And then finally, and I'm going to keep debt to equity at 0.6, just like I did on the other one. And then in terms of PE ratio, let me see if I can read my writing here. 1.2, no, that's a yield. A PE ratio was 32. So if I want a PE ratio of less than that, I can just say 30 or less on that if I want. Or if I wanted to get more specific, I could go down to 20 or less on that PE ratio. I can view those matches, and we only have 2 results on that. Now, so now what we're going to do is, if you decide, that's too few or too many, we may tweak our criteria a little bit. In other words, if we come up with 30 matches, I probably can be more specific, more strict on the parameters that I'm looking at and narrow it down to a more manageable number. If I come up with, 0 results or 1 result or even 2 results, what we could do is we could look at those parameters and we could loosen them up a little bit maybe. Maybe instead of that dividend yield of 2%, we'd go to 1.5%, which would still exceed the average, the industry average of 1.2%. If we go to 1.5%, say, for example, it's not like a huge dividend payer, but if you're just trying to get some dividend exposure in your portfolio, it can be meaningful in a broader in the overall portfolio over a longer period of time. And that's what we're talking about. We're talking about investing for longer hold stocks. These are income dividend investing stocks. We're not trading 2 months, 3 months here. Okay. So let's go. Yeah. And Long Snapper said, well, it isn't a dividend sector. Okay. So yeah, industrials aren't. That's why we're targeting it, is we're trying to say, we're going to we're going to find a sector that isn't traditionally a big dividend payer, and we're going to try and find some of the top payers of dividends in the sector that also meet the other parameters there. Okay, so let's do this. Let's look at our companies, and you can see, and marine transportation here. Well, it's not really a company I'm very familiar with, but let's click on it. Euroseas, and we can look at the company, and let's do this. And look, here's a 3-year view. Of course, you can look at it whatever time frame you want on this. I think for a longer term investor, a longer term view may be good to consider, to look at. Let's look at our dividends. Again, I'm going to click on show more. You can see the history of the dividends. Nice dividend increases there on this. This is just year to dates, and we're relatively early in the year, so not a problem there on that. And you can see other information. Payout ratio is low. It's not paying out that much in terms of the money it's making, the company's earning. Let's go ahead and let's go to, there's dividends. Let's go to earnings and look at its earnings. Now, it's had a couple earnings misses, and sometimes we'll get in the question of, is an earnings miss a terrible thing? Well, for a trader, it can certainly negatively impact the stock price. But generally, what I would say for the longer term investor, what you want is increasing trends on earnings, increasing revenues there on this. So there we go, and cash flow for that matter there. So there we go. Now, when we're looking at this company, when you want to look at it, let me just shrink this down. This is clearly not as big a company. It's a small company. In fact, it doesn't even have a company profile there. That tells us it's a smaller company. So, you may want to do a little more investigation on that. You can look at your analyst reports, like I mentioned before, to get some more information on that. And finally, let's look at our peer comparison here on this. Peer and ratio comparison. And let's go right here. And you can see the company down bigger today. But as you look at this, profit margins, that's generally a pretty high profit margin. Debt to equity, that's reasonable. ROA, ROE. Now, if you want to see longer term trends on some of these things as well, what you can do is you can then go to you can go to the financial statements as well. I'll show you where those are. But you can also see growth rates here going back 5 years, huge growth rates on those, and read more reports on those companies if you're of interest there. Let me go back and let's just go to those financial statements. So there's your financial statements, and you could break it down. Each of these tabs is going to give you some more broken down information on that company there. Okay, so that's how you do that. That's how you do it. So look, here's the point. If you're going to build a diversified portfolio, you can't just stick with real estate and utilities and staples as the only dividend companies in those sectors, or else your portfolio is probably not going to be that diversified. I'm not saying you need representation among 11 different sectors. I'm not saying you need to go to IT to find a high dividend payer. But if you want to kind of just look for companies, whether using dividend investing or not, this is a strategy that you can do. You can go to your screener, find peer information. We use sector information, but you can break it down and look at some companies that you know are very close to it. So for example, if you're looking at industrials, and let's say you're looking at FDX, Well, we know that, and that's air freight and logistics. I was wrong earlier on that. We know that maybe UPS is a better comparison than some other industrial type companies there. Um, you can get that information for those as well and use your peers comparison for that. So whether you're doing income dividend investing or other types of investing, consider peer evaluations as you're putting in the screener. And then the screen is just the first part. Then after that, you need to go and look at the individual company. You can look at financial statement information if you want as well there. A reminder, there is a survey link in the chat. We appreciate your feedback. And also a reminder, if you like the webcast, you can click on the thumbs up at the bottom of the page. We appreciate that. Also, subscribe to Trader Talks. This is on YouTube if you want more content like this. The Trader Talks is a great place to know about and to subscribe to that. We have a lot of trading webcasts. We also have some longer term like investing webcasts. Check out Building a Stock Portfolio, Tuesdays, 4 o'clock Eastern Time. Kevin Horner teaches that one. Make sure you check out that webcast. Also, start your day off with Trader Talks, Monday, Wednesday, Thursday, Friday, Trader Talks. Anyway, I think Cam's back next week, but in the meantime, thank you for joining me. Coming up next, we have Trading the Trend. Thanks, everybody. Have a great rest of the day. Bye-bye.